Hello everyone, this is Teddy Keckstead from Forex Trading Unlocked, and we are here on Wednesday, March 16th, 2022 with a Forex trading market analysis for you. We just want to show you our disclaimer to remind you that this webinar is for illustrative and educational purposes only. And if you haven't done so already, whoops, no, need that, wrong one, there we go, right slide. If you haven't done so, please subscribe to our YouTube channel, Forex Trading Unlocked, or our Twitch channel, Forex Trading Unlocked. And also check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. We will actually be discussing a couple of high probable Japanese candlestick patterns that are evolving right now. Alright, with that, let's go to our live active screen and blow this back up. Alright, here we go. We have the forex-trading-unlock.com website pulled up already, and from our market analysis and education tab, we hit the workstation already. Alright, so I already got some charts going here for you. Yesterday, we know we had a little positive day. Today, in front of the Fed meeting, we are rallying up, hanging just below the new highs of the day. As far as how much action we're going to see, I would think that probably over the next few hours as we head into the lunchtime trade and going into the Fed meeting, I would expect that things start to taper off. I would be very mindful of that. So don't try and push a trade right now because it's going to be most likely winding its coil, especially with the currencies and the interest rate markets. So that's what I'm expecting right now, and it's usually the format for how it works on a Fed day. So what's going to happen today? Well, I think all of us are aware that it is almost 100% chance that we are going to see the Fed raise interest rates a quarter point. What's that going to do? Well, hopefully what it's going to do is make this market move a lot. So we have an upside target area here of 111.53 up to 112.32. This is pretty much, I think, the high end of the correction if we are to continue the bear market. There's a lot of factors right now and they're kind of laying off tensions on the euro. That's because of the talks going on with Russia and the Ukraine. But let's be realistic, unless NATO and the Ukraine and Europe and the United States honor the one request that Putin said he would back off on, I don't think it's going to happen anytime soon. So if we don't say that we're going to give them 20 years of no more NATO encroachment and what have you and Ukrainian neutrality, then that supposedly is the key to having him back off. That's what he said he would do. The question is, our side doesn't seem to want to accept that. So as long as they're talking, expect the Euro US dollar to play with resistance a little bit. Remember that the rate hike is going to happen most likely this afternoon. It's already factored into the market, so no one's thinking anything about today's hike. More what they're going to be waiting for is what does the Fed chairman say afterwards, giving any advice, any type of indication of how soon the next hike will follow. I would say that considering the pace at which they're doing things, that it would be very unlikely that they will raise the rate again next month or anytime soon. I think they'll probably wait until midsummer and then do a midsummer pop and then maybe another one towards the end of the summer or beginning of the fall. That's just my opinion because I think that's how they operate. Now, be careful of this market if the bears come back. If we fall down and take out this low from just a few days ago, oops, why is that not working? Here we go. Okay, right around here at 109 even basically. If we fall below here, we'll be laying on 108.09 in no time. So, and then we really will be playing with support. Now, you will typically have a lot of buyings that comes in between the 109 to 107 half area, which historically has been a very good bounce point or at least a consolidation area. This crisis, what's going on, may make things a little bit different. Should oil start to rally heavily again and take out the high from a few sessions from last week and up around 120 something dollars a barrel, if we start to make new highs in oil, then I would really suggest that you be cautious with trying to buy the Euro US dollar, because odds are if oil continues its rally, then you're going to see that support is going to be most likely we're going to get challenged. So I don't think you're going to have any chance with rallies. I still think it's right now, no matter what, it's in a bear market. You have to view the short-term bullish momentum as a corrective move until we have any type of real valid signal that the market's turning, which fundamentally we just don't have until we get something like a ceasefire in the Ukraine, Putin pulling back, as well as a retreat in oil prices further, which if we had oil back down at $70, $60, as high as that still would be, it would mitigate some strength between the euro and the US dollar. So okay, these are target zones. Remember, it's Fed day. If you're not in the market already, stay out. I would expect a lot of algo erroneous moves today. It could be a non-event. You never know. Sometimes it's just a flat line. Nothing. Maybe expectations are totally there. However, I think that today we probably will see the algos kick up a lot. Remember, it's also expiration for futures. We're in the middle of rollover for the financials and also the oil contracts. Oil has expiration every month for futures and options, but the financials are 4 times a year, March being one of them. So that gives a lot of weird movement in the futures. So the difference between being a discount to cash or a premium to cash, as much weight as those hold, you're going to have a lot of weird pricing and as you rotate and exit the front month contract before it goes off the board. So for futures and more advanced traders, you know what I'm talking about, being reminded of this. For the beginning traders, it is something to be mindful of. A Fed meeting in the middle of rollover does have impacts on market volatility. It definitely adds to it. So be mindful of that. So we do have a buy signal yesterday. If you watched our video, we were talking about how this was forming, and guess what? It did. It closed higher. We have a bullish engulfing line, short-term counter trend buy signal. As far as how high can we go, or is it sustainable? I don't know about that. That depends. Like I said, I think the interest rate factor as far as the first quarter point is already factored in. There's a total of 3 that are guesstimated by the market, so I would say that 2 to 3 are almost already factored in as far as pricing wise. And once we get the trigger pulled today, you'll probably see a little profit taking and a little bit of a retreat, especially if you see the 30-year Treasury bonds and 10-year notes start to rally, because right now they're on their lows or near their lows. If you see a rally after the meeting, remember there's only 45 minutes between the time they release the announcement and when the bond market closes. So that also could cause a lot of, if you have a serious bond move that happens within that 45 minutes, I would expect that you're going to see a wild flying S&P 500 and other stock market indexes. Whether all stocks will fly around, that's another question, but I do believe you can see some extreme volatility kick in should that arise. Now, what would that do to the pound US dollar? Well, that would help aid the pound US dollar bulls, meaning that just like the euro, it would give a little strength to the foreign currency crosses in Europe, meaning weakness in the dollar. So remember, the dollar has been on a tear. It's really close to that $100 level, and should it get there, I think it will. I think we can have a little bit more upside into that area, but right now it's a good time for profit taking. So I wouldn't get bearish the dollar just because we have a sell-off, but we're due for some profit taking, which would reinforce this short-term buy signal for the British pound US dollar. So, and by the way, let me just check on the chat to see if anybody's there. Hey, whoop-de-boo, let's see, it's some XAU US dollar. Okay, so for this guy here, we got a question on Twitch. Yes, we will get to that on the next market. The gold market is something that is definitely coming into play. So we have this buy signal here. Short term, we're looking for a challenge of 131.95. This is the key level to cross. If we get above here, it's very likely that we could butt up against this 133.25 to 134 even, basically. This would be the extreme, I think, of any corrective move. Now, should this market all of a sudden become a bull, well, then it would probably consolidate and continue higher. But I think that right now you have to view it as a bear market with a potential bullish correction to the upside. Now, if we take out the low from yesterday, obviously all bets are off. So it's a low-risk, bullish counter trend play right now. As far as selling it, I would look to sell anywhere above 131.95 up to 133.25. This is where I could see you get an exhaustion and start to see the market pull back. All right, so gold is something that is definitely playing into what's going on. so let's look at the XAUUSD, since we have this question from our Twitch follower here. Okay, all right, so everybody take a look at the gold contract. You can see that right now it's under a little pressure. There's some interesting things that are going on with the gold market, especially on the short-term basis. So overall, gold has a very bullish outlook right now in the short run. As far as what is going to happen in the future, well, that's anyone's game. A lot of it has to do with the global tensions that are going on right now. So let's take a look at this. Well, right now, right off the bat, we have from a few sessions back, right here, we have a bearish engulfing line sell signal. So the first thing about this is we have a nice correction and follow through. The signal has already been validated. All right, so, and if you read the book, High Probable Japanese Candlestick Patterns that I've written, you would know how to trade this bearish engulfing line and apply it to the gold market, bond market, the Forex market. It doesn't matter. It works in all markets, even the options markets. All right, so here we go. All right, so we came already into the 50% retracement, which is always a Gann number, a Fibonacci number, and also a great trader's pivot point, gravitation point. So we already fell through that yesterday, settled below it, and today it's kind of funny, we topped out right on it. So we're consolidating right in this zone. So for our question, what is going on with gold, I think that we are finding support here, my friend. Because of the Fed meeting, I would wait until after today's trading, but I would not doubt that sometime between today or between this afternoon and Friday that this market starts to probably will stay consolidated, but then probably get above this 1,925 area. Going into the weekend, I wouldn't doubt that you see a little show of strength. So have we bottomed today? We may see, I would be careful with the Fed meeting, it could get crazy. You might see a lot of volatility after 1 o'clock, so that's why I would stay away until tomorrow at least to reevaluate things and then look to buy dips right now. Now, as far as a breakout to the upside on the hourly basis, yeah, your trend is too strong. There's nothing. You got to wait for a valid change in momentum. So right now, I think you are consolidating, but I would look to, if you're going to buy this market, look to try and buy it around this 1890 to 1900. Give it a little bit of room. I would lowball this market. There is this low right here. I think this is going to be good support. Now remember, markets tend to go out like they come in, and if you believe that scenario, which I totally do, we've done that. You can see how we rallied. This is where the extreme rally came in. Now boom, we've had this correction. Noticeably, look at what else has done that. The oil market. So you can see is we've had an extreme run up in both the oil and gold markets. Okay, so this is March 8th when it topped out in oil. Similar chart, right? March 8th. Both oil and gold had topped out on the same day. Okay, now think about this. If you watch my videos, I say very often that markets tend to go out like they come in. Now, this, if you have a steady slope, now 45 degrees is typically a great baseline for a slope for a trend to maintain over the longer term. So think about like this. Here's this low, and let's go to like, this would be about a 45 degree. Ironically, look at this. This is where it comes down into. So when your slope gets very radical, like it did here, that's not easy to maintain. Eventually, by attrition, you would go through that upward sloping support line. However, when you fall through it, this is because of the reverse in momentum. You get an exhaustion move. So this is where volatility is so extreme, you get this run up that boom, it first starts out as profit taking, but momentum builds because you blew out all of your weak shorts going all the way into this. No one's shorting it, and also it's hard to find buyers because of the run up. Everyone's afraid once this turns. So when you come back down to here, you can see this is towards the 45, coming right into this support area that we pulled out with the 50% and 0.618. This helps to support that. We found we're going to go neutral, balance out things a little bit, and then look to go higher. So it'd be very likely to watch this market over the next couple of sessions, see it kind of bobble around, and then start to continue the trend higher. Now, is it going to come out with the same velocity that we had with this rally here? I don't think so. I think a lot of this has to do with originally was the Ukrainian-Russian conflict. Overall, gold is a bull, but it got ahead of itself. So I think that we're going to start to balance things out and then start to gravitate towards the $2,000 level. So very good question. Thank you very much, my friend, for asking that. We got a couple other likes and shares out there. We appreciate that as well. Thank you very much, guys. Let's see, we have no questions on YouTube. And okay, so that was answered there. All right, so hopefully that was a good one for you. All right, so we got the pound done, the euro, we got the gold, and now let's go look at the US dollar CHF before we go over towards Asia and stuff. All right, US dollar CHF, we topped out yesterday. You can see that we're basically unchanged on the day. Going to the Fed meeting, I think this market is definitely going to be quiet and still. Should we start to fall down to the downside and correct? Be mindful of the fact that this market's been basically in a $3 range, $2.50 range for months. So a pullback down towards this area here is very likely, especially after they raise the rate, have some profit taking, and once again, the dollar index, I can see that coming off a little bit. So if the dollar index retreats and profit taking goes there, most of your currencies are going to rally against the dollar. So in this case, we would start to see a slide. Key off of the high from yesterday, momentum above here is expected to build up towards 94.5 up to 95 even. That is the extreme, I think, for this rally. Now, remember how I just mentioned in the last one, markets tend to go out like they come in. The slope of this rally is very, very steep and very severe. So this would come into play that the Fed meeting comes in, we have dollar weakness for a couple of sessions, which gives us a chance to pull back to this range, which is the upper part of this middle trading area where it had been in for months. So that's where we're looking. Upside 94.5 to 95 even. Should we take out yesterday's high? I would stay away from this trade though for today. Could it all happen over in a few hours? Absolutely it could. But I just want to let you know that your reward to risk ratio on these trades is not very high. So in other words, if you are a bull and you want to get in now, like just say, okay, I want to get long now and see if the Swiss takes a breakout to the upside. Well, your potential to the upside is maybe a half a point, to upwards of 1.5 points, but your downside risk is every bit of $2 to $2.50. So your reward to risk ratio is flipped. You want to have at least 2 to 1 reward risk ratio, not the opposite where you're risking 2 to make 1. So just think about the odds. The odds are not lined up. Even if your trade would be right, it doesn't warrant putting that on, because 9 times out of 10 it wouldn't pay off. And the thing is, yes, this is a ridiculous loser. You know, you'd rather have, when you put your perspective into where you have a potential reward to risk ratio of at least 2, I like 3 to 5 to 1. That puts you in the winner's circle and also helps you to maintain your your capital balance. So US Dollar Jpy is next. This is a nice little breakout that we've had over the past few sessions. Those of you that follow me know I've been long the US dollar yen for months. And obviously I've been in limbo for the past few since the year started. We started off strong and then went sideways. But this week has been good to me. My quarter has definitely been put into place now. So especially because I loaded up on this position and I have not been trading other markets because of that, or at least not as many. So you got to remember also to allocate your capital properly. Never have it all up at once. Always never have more than 5 or 10% at all of your capital up being active, especially when you're dealing with derivatives. So, okay, well, we are bullish the US dollar yen. It hit our short-term 117.5 upside target. We have a 122 target in the longer run. I think that you could see a little pullback over after the Fed meeting today. Now, are we going to have an extreme one? Well, I don't know. That's a tough one. If oil stays where it's at or goes lower and you see a rally in the bond market, then it would be very likely that the US dollar yen could retrace down to this 116.25 to 115.81 area. This would be the extreme. This would be the top end of this range, where this was resistance, could find support. I think this would be the most you will see out of a slide. Also, if you think about it this way, as far as on a trend basis, this is the slope that the trend has been in. So for it to come back down here and then press on higher, that would be the way it's been snaking along the whole time. Right now, the market's gotten a little ahead of itself, but once again, if the tensions don't ease in the Ukraine and dollar strength comes into play, and especially if the bond market starts to hit support even more, that would fuel the U.S. dollar strength. Remember that as rates go up, that does help the U.S. dollar as far as strength is concerned. So between if oil's railing and the bonds are breaking and the 10 years going lower as well, then I would say most likely for the U.S. dollar yen bulls, you're going to have a lot more support than you are going to have resistance. So a good shot for making that turn towards the upside, or continue that move to the upside. All right, Australian dollar, U.S. dollar. This one here came into nice support yesterday. If you've been watching our videos over the past couple of days, we hit down into our support target range. We bounced off this low yesterday with some nice follow through here. Now what we have is a short-term buy signal forming here in the Australian dollar, US dollar. We have multiple fundamental reasons why we are bullish the Aussie dollar, especially because of the commodity standpoint with the appreciation in pricing and them going back online. This is called a 3 inside up buy signal. Now, if the market was to settle where it's at right now, that would confirm it. Right now, we don't have that buy signal until it closes like this, or at least positive on the day. If that's going to happen, then I would say moving into Thursday and Friday, I would expect to see follow through with the Australian dollar, US dollar. This coincides with our view of seeing profit taking in the US dollar after the Fed meeting, meaning weakness in the dollar, strength in all these other foreign currency crosses against the dollar in the short run. Remember, some of these moves like this, I think, is a trend move. Australian dollar, US dollar, meaning a bull. So that's going to, where the divergence comes in, is that after let's say the euro bounces and then starts to go back on support, meaning dollar strength comes in, I don't think you're going to see that with the Aussie. So we have divergence where the dollar index, it's why it's going to probably get up to that $100 mark, but it's going to be hard moving above that very quickly because the euro is the biggest weight in the dollar index. But if the pound is neutral and the Australian dollar and a couple other currencies start to continue to rally against the dollar, the index isn't going to move up as high as it would. Now, every time the euro goes up, it will, but it will most likely will start to go sideways to lower, even though it will have a lot of strength versus the euro. So the dollar index is going to be a tricky indicator. Divergence, once again, typically means a buy or sell period, and that's what we're looking at. So we're watching these trends, and as long as we remember, higher move highs and higher move lows is a bull trend. Lower move lows, lower move highs is a bear trend. So the overall trends right now, we are looking to remain in place, except certain ones. Right now, the long-term bear, the Aussie dollar, US dollar trade may be over now, and I think that it's going to start to grind higher, even in the midst of dollar strength. So just be aware of that, and that there are some counter trend trades now. The dollar is not going to be simultaneously strong versus all currencies at one time, or weak at the same time as well. New Zealand dollar, US dollar is not quite as strong as the Aussie, but this has confirmed also as of today, should it close like this, a 3 inside up buy day. Will this happen? Well, we'll see. We won't know until after the close, but I like to see this scenario as well. I don't think you're going to see as much potential to the upside as Australian dollar does, but I think you will grind higher. There are some reasons why the New Zealand dollar, Aussie dollar may actually not do well versus the Aussie having strength, and the reason that is because of certain factors that are going on within their own government and within their own economy, things that are being, their COVID restrictions are very, very strong there still. So versus Australia that had been super strict, but now they are finally opening up things. So that is the interesting thing that we'll be watching over the course of the next few sessions and a few weeks. But that is where also I don't think where they normally trade in tandem very similarly a lot. They probably will still be in tandem, but you're not going to see the volatility or the potential, especially upside potential in the New Zealand dollar, US dollar. All right, now let's go to the US dollar Canada. By the way, if you haven't done so already, please subscribe on the YouTube or Twitch channel that you're watching us on, and also like and share it if you wouldn't mind through Twitter and out to your friends in the trading community. US dollar Canada, boy, what a ball of fun this thing is. It's been going sideways, kind of grinding higher. That still is the overall trade, because higher move highs and higher move lows is indicative of, once again, a bullish trend. Am I in a buy dip scenario? Not really. I think you have to key off of oil, and also the fact that we have two administrations colliding. It's odd that we are having the issues with Canada of all countries. I mean, if you were to tell me 10 years ago, 20 years ago that we would be in a world where the U.S. and Canada have these kinds of relationships, I'd be like, yeah, right, okay, sure, So, but yeah, you can't make this stuff up. So that's not helping the currency trade here. I would wait for a valid buy or sell signal before you jump on anything, especially with Fed day to day. If you're not in a trade with a reason to be in it, get out, stay out, and wait for tomorrow. Or actually wait for a valid signal, which right now there is none. I think that you could see US dollar Canada become a big bear again. There are multiple fundamental and technical factors that could bring that on. Short run, if we do see any type of strength in the US dollar Canada, I think it's going to wane very quickly. So right now, upside potential, we have to take out this 129.01 high here, and that'll have us challenging this 129.62. If we get above there, obviously it's strong, momentum is there, but I could see us making new highs only slightly and then consolidating and coming back. As you can see here, we have some good swings going on here. I mean, just in this period of from February 23rd to March 15th, we had a run up to here, which is at 128.82, then all the way down to 125.86, so a $3 slide. Then it comes a little more into $3 rally, just takes it out, and then almost came, well, more than halfway back. So we'll see if we can maintain a sustained trading above 125.86. Well, sideways to higher is the call. Should we take out 125.86 to the downside? Well, then that's a totally different story. Then I would say that you have to look at it in a totally different light, in which case then the US dollar, Canadian dollar is most likely a big bear. So we'll see how this pans out. Do we have any questions? Let's see. No questions on the chat on YouTube, but thank you for the likes. We definitely like that. Appreciate that. And then let's see, what do we have here on Twitch? Okay, a couple more people watching. Love that. All right, so US dollar Canada, we finished with that one. Now let's take a look at a couple cryptos real quick. Really amazing how we definitely finally got a little bit of movement here in the Bitcoin, huh? But not really that much. If you see, it's still maintaining this kind of wedging posture. We do have a nice little upside surge over the past few days. But if you look at like yesterday, really consolidated, not much to write home about there. Most of the sessions over the past couple weeks have been that way. So are we going to swing higher? Are we going to swing lower? That's a good question. I think that we're ready for a good move. I would key off of support right here. If we take out this low here with 37,000 basically, then I would say we're going to be hammering support probably down to below this low back here that we set in January, and probably get back down into the upper 20-something thousand area. Now we do have this nice little downward sloping resistance line here. Should we break out to the upside above this last swing high of 42,600 basically, then I think you're going to see a little bit more buying momentum going on, and then a continued rally. So by attrition, we're going to take out this trend line no matter what over the next month and a half. But I think it's before that happens, we'll see at least a challenge of resistance. If we fail to breach this resistance here, then look out below the upper 20-something thousand handle. It's probably a very viable downside target area. All right, for Ethereum US dollar, very similar. This one, if there's any market I think I'm a little more bullish on, it would be Ethereum. I think that this has the potential to break out to the upside, not by a lot, but definitely have a show of strength, meaning that not necessarily that it's bullish, but I could see it consolidating this range. So if you look at how we basically found support here, then also boom, we found support here. This has now become resistance. This has become solid support. We've been bobbling along support. So let's make another run up to resistance. That doesn't make it a bull just because it takes out this trend here, you know. I mean, if we look at this, yes, it would take out this short-term trend, but if you really look at it, the trend has been sideways. So we made this low here, made a lower move high here, higher move low here, lower move high, higher move low. This is all consistent of a consolidating, narrow ranging market. It's wedging. Once we take out either highs or lows, that will dictate where we go. So we'll see how this manifests. I think short term there's a nice bull. We could get a run up towards 3,000. Will it maintain strength after that? Well, we have to wait until it gets there to make a decision on that one. We have to see how the others follow through. All right, let's go back to the Euro US dollar where we began. As you can see, it's pulled back a little bit, and we are now at 10:20 Chicago time, 11:20. So we are in New York time. So we're 2 hours in front of the announcement. And like I said at the beginning of this, I would expect that you're going to see a sleepy lunchtime trade going into the number. If you're not in, my friends, stay out. I'm staying in the U.S. dollar yen, but I've been long for months, and I got my stops in. I don't think we're going to get that low. But I do have a profit-taking stop in for a couple of contracts just in case we do have a big whipsaw to the downside. I can get out and then buy back in on a bigger dip. So, which is very possible. So once again, I'll even show you that real quick to wrap this up. So the trade, if you are long the US dollar yen, I would look out. Should we take out this 116? Yeah, it's basically 117 area. Anything below here confirms that it wants to come into here. So I wouldn't mind. I'm taking a little bit of profit here no matter what. Should we pull back to there? And then I will be buying back into this area to add on to the position. So, but who knows? We'll see. Right now, this is floating and pressuring resistance right now. Maybe the U.S. dollar yen continues to break out to the upside. It would be very nice for me, and I would be really appreciative. So, but anyhow, not to make joke or light of that one. So, but anyhow, we really appreciate the question that we had today, and also for you viewers for showing up. Please make sure that you did subscribe. Check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com, and you can learn how to trade these signals that we highlighted today. And you can use those in both futures, stock markets, Forex markets, you name it. You read the book, it'll teach you how to apply it to all of them. So I'm Teddy Keckstedt from Forex Trading Unlocked. Check us out every day at forex-trading-unlocked.com.